Hi guys, welcome back to another one of my videos, and sorry I've been so bad at uploading. Cheers for being super patient with me. I've recently moved house. It's been very stressful, and I've done a lot of decorating, and I want to say thank you for all the love and support all of you guys have been giving me. It's really been inspirational, and now I'm creating another video on imbalance part 2 with the introduction of the break of structure. Now, the idea of this, it will give you an idea of which imbalance to choose when entering a trade. So, you know, when you've got your leg up, you have multiple imbalances within that leg, and so you don't know which one that price is going to reject. I'm going to give you a further idea of which one you should be choosing. Okay, so let's jump into the charts and I'll show you how that's done. Okay, so now we're into the charts. I'm going to need you guys to create your templates for both the imbalance and the trend line for the break of structure. Okay, so now you've created these. The idea of the break of structure coupled with the imbalance is that when you see the last break of structure, so look at this example here, yeah? So you got to push down, price created a low, and pulled back up. So when you see the last break of structure, like so, this is a good indication that the imbalance that is going to be chosen will lie within this leg that broke that last break of structure, if that makes sense. So let me try to talk you through. So price pushed down, pulled back up, and then back, and then broke that low, indicating that the trend is carrying on going down. Okay, so now as it's broken that low and left an imbalance whilst it was breaking that low, price is then going to retrace back up into that imbalance to then go down. So as you can see, this leg, it holds a lot of imbalance, and ideally we would have wanted it to go up here, but you have to be prepared to take on the opportunities that don't happen. So the imbalance stretched over this candle as well, so we can stitch them all together so we can capitalize on this trade rather than missing out. So it's about getting small wins rather than one big win, if that makes sense. So again, we've drawn up this imbalance, price and broke structure, pulled back up into the imbalance, and here we will draw our 50% mark. So here to here. Price hit 50% of that whole imbalance in one. And this is where you would enter your trade. Like so. Stop loss at the top of the imbalance. It's 4.4 pips stop loss. It's a great trade, and your first target would be, just delete the spots here, right here at the lows. Okay, so this is where you would take your profits, or take partials, so close 50% of your trade, and then set your trade to break even. Okay, now the reason for this is there's already a winning trade. So bang, now we're at break even. Use my stop loss line there, and the risk to reward ratio is 1.57. So even if you did this constantly and it only came here and then hit you break even, you would still be in a profitable trading strategy. So, but the fact that this trade actually came down, hit the take partial, so you closed half of it, and carried on down, it shows that it's a good, profitable strategy. So you see this huge leg up. So the next anticipation of price of where it's going to go is probably going to be down here. So yeah, you would then drag this down, and then this will be your second take partials. And then so now you've closed 50% here, 50% again here, and then you leave it going, and another 50%. And there you go. That's a 5R trade, guys, 5.3, which is pretty good in my opinion. So yes, that's one example of a trade. I'm going to go through it with a few more, just so you can grasp the concept. So as you see right here, we have a break of structure with the low. So with this leg that broke the structure, we would anticipate the price would come up into this imbalance, either here or here. But the idea is we would cover both of them with our entry and our stop loss, to save all the opportunities. But in this case, price didn't come back up. It will at some point come back up to capitalize on the money that's left behind here, but this time it hasn't. So now we skip this trade. We just don't enter it. And then again, what do we have here? So we have the break of structure right here. And the imbalance like so. We then draw this value out, and what do we get? Price comes to it, rejects it. We enter on 50%. Like so. Now, as price created a low here and then came back up to it, we'll then set our first take partial to this level like so. And again, positive, and we would set it to break even. So in this case, we would only get this leg, so from where it came back up and then it started to go back down again and it came back to that low. That's the only profit we would get from this high to this low, because then price comes back up, just about takes us out at break even. So yes, this trade is still a good trade. We took 50% off, but still profitable, still make money on it. But yeah, things happen. We missed out on the rest of the move. So the next trade is, so we would follow price along. We see this structure being created here. You see, price created a high. So all we're looking for is lows and highs, guys. Okay, price created a high, broke structure, and then price came back down into the imbalance to then go higher here. You see. So what would we do here? We have multiple imbalance levels, okay? So we have this one, this one. As it's such a big leg, you kind of want to split these up. It's all down to interpretation. This one and this one. Okay, some of these you can group together. Again, all down to interpretation. But if I was to look at this, and I see price coming back down into these levels, so I'll be watching price live, and you can see you've got some sort of interaction here, but then it breaks down with this imbalanced candle. So I know price isn't going to want to carry on going back up around it within this level because of this strong push with this imbalance. Okay, and then price comes back down, really hits this level, and then pushes back up to this imbalance right here. You see? So this is what price to me is saying whilst it's executing this trade. So you got this smaller imbalance right here, what price is interacting with to then push it down further. Okay, so now I'm knowing this, price comes back down, shows some more interaction here, and then bang, gives a super strong push upwards. So from that, I can then enter my trade like so. Stop loss at the low. And then I would set my first take profit at this imbalance above here. So like so. So yeah, it's a small trade, a small win, 1.09, but it's still a win in my case. So yeah, guys, you just got to remember that the idea is to enter the small trades, take off 50% as long as it's above 1R, and once you've taken off that 50%, you then leave it running. And that's where you capitalize on them long winning trades. So you constantly enter small trade, small trade, small trade, small trade, bang. You're lucky enough to get a really long runner and you make a shit ton of money. No, I'm kidding. But yeah, you get the idea, guys. That's how it works. And here's another one, another example. So here, price created a low, given a break of structure, one break there, and then draw up our imbalance. Price comes to the imbalance, we enter at the 50% mark, stop loss at the high. You see how tight these stops are. 2.1 pips. Okay, time is fractal. Yes, which means this concept will work on any time frame, no matter the stop loss. If someone starts going to you, oh, your stop loss is too tight, no, ignore them. It doesn't matter. It really doesn't. As long as you take into account the spreads. If you've got a broker with high spreads, then obviously you're going to have to take that into account. But if you've got a good enough broker, it really doesn't matter. They're normally good enough to be able to give you these tight stops. But yes, so there you go. Straight away, it hit 3.05R within about 2 minutes. And yeah, this would you would close 50% of your trade here, and then leave the rest running. You obviously down here you got a bunch of liquidity, right? You see this all down here. So a bunch of retail traders are going to be buying right now to try and push it upwards. But before it goes up, price is going to break this liquidity to then go up higher. So yeah, you can probably hold this one for quite a while, hopefully. Most likely, if we put in the higher time frames, Yeah, I want to say maybe, but obviously I don't know. Nobody knows. Target is low right here. So yeah, guys, I hope you enjoyed this video and you found it insightful. Please hit like and subscribe. You guys have been hitting that like button a load of times, and the subscribe buttons. I'm really overwhelmed with it. So yeah, please comment, like, and subscribe, and I'll create some more videos. Yeah, peace.